JB here, JB here. Hope everyone's doing outstanding. August 30th, 2024. We got about 28 minutes to the open. Going to be really quick here. Talk about the markets, PCE data, some of the names I'm looking at for today and into next week and go from there. But take a look. PCE data came in mostly in line. Looks like a year over year decline. I guess estimates, it was a tenth of a percent, 2.6 versus 2.7. Kind of, not too hot, not too cold. It's an inline number. So I think not sure how much it'll move markets. You hate to see some of these data points come out when the futures are gapping, and then we have kind of a sell the news event. So hopefully that's not the case here today. Yesterday, markets were looking great, ramped to highs at 1 o'clock, churned around between 1 and 2 o'clock, and then all of a sudden, out of nowhere, 2 o'clock, the sell bots came on, and boom, markets reversed. I think the SPY was 560, was it 563 and change? And it went from 563 to 558 in a matter of 15 minutes. No news, no catalyst. Maybe some folks taking profits ahead of today's data, maybe taking profits ahead of the weekend and the start of September, which is historically not the best performing month, September, October. Who knows what it was, but if you take a look, the headlines this morning will be, oh, Dow, people who are not trading would look at the headlines, Dow closed at all-time highs, things like that. So they won't see those intraday swings. But when you're a trade, of course, you see that. Keep talking. 555 key spot. 557 was the other spot that I was looking at 2 days ago. So if we break 557, maybe I'll look for some spec hedge lotto puts today just to cover, or at least make some money and possibly cover some moves that may pull some of my stocks that have calls and down. That's kind of the thought process there, but definitely a line in the sand, that 555 area. I put on a watch list. To me, the path of least resistance is still to all-time highs, so 565 or so on the SPY would be the all-time highs. I think we break above that, so maybe some chop here today into the holiday weekend. Don't forget Monday markets closed, and go from there. And I always talk about silver lining, small caps. You could, I don't know if that's called a cup and handle yet on the daily chart, but up 0.7%, was up a heck of a lot more yesterday before the pull, but still bodes well, I think, especially if markets still chop, and let's say the SPY hits all-time highs but chops around for a couple sessions, the small caps could, maybe they finally start to outperform into the end of the year. So that's that. So individual names, HPQ was a name I traded back at the end of May, more of an AI player, right? I think it's one of those names that people don't consider an AI name. They're more on the personal side of the business consumers, as opposed to when you look at a name like SMCI and DELL, those are enterprise names. They sell to big corporations, things like that. But DELL, HPQ now has the cycle refresh coming out. I mean, it's gonna be big during the holiday season. I'm sure people are gonna be looking to capture the AI buzz and make sure people are getting products that will play into that hype. So that just bodes well for a name like HPQ, where you have, all the folks going to college or what have you, going to need some computers and what have you to capitalize on AI, which to me, some of it I think is a lot more hype than actual substance, but it's certainly going to cause some of these people to refresh. Similar what Apple has done over the years. I mean, if you've done any of the refreshes each cycle with the iPhone 10, the X, the 11, if you go up and you're on a lease plan or whatever, and you keep changing each year, there's really not too much in the way of upgrade. You barely even notice a performance difference, in my opinion. So again, they're going to hype it to make it seem like it's so much better for you, when there's really, how much performance increase do you really get? Once you start going, you hold your phone 3, 4, 5 years, of course, you'll see some, especially in the camera. But anyway, rants for other days. So I went and got some, the stock had sold off at the pre-market because on the top line, you just as an overview, you think that the company missed earnings, which they did, but then you dig in, you can see their AI business drove incremental growth. Their core business is slowing down, which has kind of been the theme anyway. They also guided for the back half of the year and into next year for more growth in the AI space. I think you take a look at HPQ, and back in May, at the end of May and June, I thought it was headed to 39, 40 bucks. It hit 39 back in May. I think it's going back there in the coming days. So got some spec calls, locked some of those in to cover. Well, actually not spec, they're September. Locked them in for 100%. I could have sold them out for the rest for 2. I think they got up to 55 cents or 45, somewhere in there. But I held the rest. I might look for some more strikes if it breaks 36 today, because I think people start looking at HPQ and say, well, this is a name that could probably see some tailwinds into the end of the year. And then that brings me to DELL. DELL reported earnings after the close yesterday. It wasn't a monster beating rate was it was mostly in line, a little higher guidance on the revenue side. Um, but then they kind of alleviated the server margin concern, but then there's also it looks like they guided down for server total servers sold for this year. I don't know if that's some delays in supplies or what have you. Uh, but the stock is up nice. I think it trades over 120. So we'll have to see how it plays here in the once it opens. If it gets over 120 or so, I'll look for some spec calls. Still have my September strikes. Those are probably going to get crushed in regards to premiums. But if it gets over 120, it'll start to gain premiums pretty quick. But I love the DELL story. And there's 9 or 10 sessions in a row where I traded between 108 and 112. Right? Just remark. Actually hit 114 yesterday. So just remarkable chop. So that tug of war eventually going to play out. And I think it's to the upside. The 50-day moving average is at 120.71. Clear Secure, the bull flag is finally, it's breaking out after a little rest session on Wednesday where it actually closed down about 2%. It rallied nearly 4% yesterday, was over $30 for the first time in over 18 months. I think this is the start of what it has a 20% short interest. So I thought it was going over $30, but the longer it stays this high and the further it goes, the odds of some folks unwinding their bearish bets on the name. So 20% short interest, that's a heck of a lot of shares that need to be covered. If it stays over $30 today, I think it goes 31, 32, possibly even higher. So might look to lock my September strikes in and get some higher September strikes, as well as possibly look for some October strikes to play, possibly for an overshoot, 35, if not higher. Love the Clear Secure story. Turn, September data is going to be out. So, data is going to be out in September. Last day in August to get some strikes. I'll be looking at October's. It's hanging right there at 50-day moving average. I still have the September's as well. The hope or the play was that the stock would rally. I could lock some of the premium in to cover costs and ride the rest. That hasn't been the case yet. Maybe we'll get that chance next week. ROKU actually did well yesterday as well, recouping some of the losses from the previous session. That 70 handles a big spot. I say 3 times that charm. It got up to $70 3 times, couldn't break. Then we had that big pullback on Wednesday. Recoup some of those losses yesterday. If it gets over $70 today, I might look for some more strikes to play for moving to the mid to high 70s in the coming days and weeks. Excuse me. Chewy, also a little break yesterday, closed flat after its big move post earnings. I did on my rant yesterday morning. I think the theme in regards to its margins, its growth in users, it's headed over $30. I'll just continue to look for opportunities to play that one for upside. And then on the flip side, if markets find some sellers for whatever the reason it might be, ServiceNow, which I look for hedge puts on, I think it's a great name. I mean, the stock's been on a monster tear, especially since June. Had a huge earnings report back in July. It's right at all-time highs. If there's any kind of weakness in the market, I could see that as a possible hedge play, maybe for a move down to 815 or so, or under that. So I might look for some spec puts as potential protection. 2 other names. So Redfin, it's down 14% this week, giving back most of its gains from last Friday on the home sales numbers. The story has not changed, in my opinion. I mean, you take a look at a massive run just in August. It's almost doubled just from the start of August to late August. Some consolidation. I mean, I hate to see it, of course, if you're in the calls, but story hasn't changed. I think it still has a 15 plus. Not going to add anything just yet. I'll wait to make sure I'm not catching a falling knife on some bounce calls. And then SEC Limited, big move to the downside yesterday. I don't see any catalyst for it. I'm hoping it's not going to come down and fill the gap, or at least get down into the 50-day moving edge. Still a great story. Still think that trades triple digits. I'll be patient adding more strikes there. And then ENVX, I've been talking about this week. It's still under its 200-day moving average. It's closed down 4 sessions in a row, 5 of the past 6. I think it heads to 850 and below, or $8 and below. I'll be looking for some possible puts to play that one for downside. And I think that's it, folks. Don't forget, markets closed Monday. Big jobs report on Friday. I'm sure, especially if there's surprise revisions, more backward revisions, right? We already had the benchmark revisions for the jobs report. That was all talked about. The August jobs report July jobs report was the big catalyst for the market to sell off. So we had that sell off Friday after the jobs report, and then the whole weekend to mull it over. Then you had issues in Japan. People worried that Japan that they were going to raise rates in Japan is not good. It caused a whole shock and with the yen carry trade and the currencies and the bonds, all that stuff and whatever. To me, it's just all They just try and rationalize moves in the market. But either way, I'm not saying we have a setup of the same scenario. But if the fact that it's going to happen in September, then we have the Fed meeting later in the month, could be interesting. So that's it, folks. Let's have a great day. I'll be back on the audio later. Rock and roll.